Welcome to the TRADER24 studios for your daily financial update on the global markets. The new week is expected to bring strong excitement to investors around the world as the macroeconomic data in the US and the Eurozone on the one hand, and the plethora of corporate results on Wall Street on the other will have a strong impact on the global markets. An impact caused by high inflation at multi-year and or historically high levels in the major economic systems, from high energy costs and from a war that is not about to end and whose medium-term consequences have not yet been reflected. In other respects, the freight market is under pressure, having lost over 50% of its average since the end of 2021. The US dollar remains at 20-year highs. Gold and silver have suffered heavy losses in an environment that would traditionally favor bullish sentiment, while the government bond market remains under pressure, seeming to have long anticipated the tight situation. You're watching the TRADER24 Daily Global Market Overview. Let's take a closer look at the situation. On Wall Street, the outgoing week ended on a positive note, but with investors trying to find their tempo in a difficult landscape, with a lack of medium-term direction being the key feature. Volatility is likely to increase through Friday as we await new FOMC decisions on interest rate targeting and the Federal Reserve's balance sheet contraction on the one hand, and the macroeconomic data and Q2 GDP and corporate results for more than one-third of the large-cap S&P 500 on the other. Another element that will act as a drag on the equity markets is a statement by Treasury Secretary and former Federal Reserve Chair Janet Yellen that recession is inevitable. The New York Stock Exchange Index remained within the 14,000 to 15,000 range that has plagued it for the sixth week, with continuous alternating positive and negative sessions of moderate volume backed by expectations for a modest easing of the Fed's aggressive moves in terms of interest rate targeting, with a scenario of another 100 basis points hike looking distant. On Friday, the key indices S&P 500, Dow Jones, and Nasdaq closed with losses of 0.93%, 0.43%, and 1.87% respectively, being in negative territory for the most of the day and ending at intraday lows, while the small cap followed with Russell 2000 at minus 1.62%. Most S&P sectors closed negative except for utilities, consumer discretionary, and real estate, with communications at minus 3.47% and technology at minus 1.38%, recording the biggest losses. The VIX risk index remained unchanged, with the picture giving mixed signals going forward. The main negative protagonists in large cap were SVB at minus 17.15%, Bed Bath & Beyond at minus 12.05%, and Seagate at minus 8.11%, while in tech, Peloton was the worst performer with a minus 13.23%, Meta with a minus 7.68%, and Align with a minus 6.46%. Finally, in the industrial Dow Jones, 19 of 30 closed negative, with Verizon's minus 6.74% making the biggest impression. In the pre-market now, most listed companies are hovering around unchanged, with the Chicago futures not giving clear direction, with plus or minus 0.2% signs, at least for now. Asia closed in negative territory with no particular losses, with the Hang Seng down 0.62% at 20,481 and at one-week lows due to the intractable situation in the Far Eastern ports. Japan's Nikkei lost 0.7% in the 27,100 area. The Shenzhen was down 0.90% at 1,945, while the Australian 200 was also unchanged at 6,780. In Europe, a hot week is expected with GDP and economic growth announcements in major countries. Moreover, the consumer sentiment index in Germany is in line with expectations and about to see an all-time low, and business sentiment a two-year low. The markets in Europe were not in high spirits. The DAX and CAC 40 as well as the 600 Euro stocks closed with slight gains of plus 0.30%, while the 50 was unchanged. Here, everyone is speaking Italian, as the crucial political issue opened by the resignation of Super Mario and the uncertainty for the moment about the early formation of a government in the next elections will take center stage in the coming weeks. At the same time, the ECB has already joined the interest rate hike war, with for the first time in 11 years, plus 50 basis points being a fact. Vonovia stock saw the biggest gains at plus 6.51%, followed by those of SAP at 4.45% and Zalando with a 4.24%. For now, Euro markets have opened in negative territory with pessimism winning over sentiment. In the Athenian Stock Exchange, Greece is unchanged in the general and 25 large cap indices, with the banking at minus 0.76% and turnover remaining extremely low. In U.S. Treasuries, there was strong investment interest, with government bond markets on the one hand focusing on long maturities as a result of the expectation of an increase of only 75 basis points in the U.S. benchmark rate, and on the other hand driving the 10-year yield well away from the local highs to 2.78%, the critical level at a 6-month low. The 30-year lost 3% level. The spread opened dangerously at 21 basis points in favor of the 2-year, and obviously the week holds many surprises. In Europe, the yield on the German bond was depressed to 1.07%, the spread of the Greek at 223 basis points, the Treasury at 174 basis points, and the gilt at 90 basis points. In the forex market, the mighty US dollar lost some ground from its 20-year highs of 108 DX points, currently standing around 106.5. The concern of an expected further Fed benchmark rate hike this week remains, with investors anticipating the 75 basis points, hence the modest softening of the aggressive picture in the US currency. The major exchange rate remained in the 1.02 area, with the pound losing as much as 1.20 US dollars. The yen remains at 136 per dollar, missing multi-year highs, while the Australian dollar stopped at 0.69. Biden's attempts to reach a deal with the Middle Eastern oil producers on the supply issue proved fruitless, so that crude oil would remain below $100 and at 3-month lows. Brent closed marginally positive at $104 after 3 consecutive down sessions, and fears that the Fed's monetary policy will strangle economic growth are coming back to the fore. Also, there remains the problem of very expensive natural gas, with a European TTF over 160 euros per megawatt hour and Henry Hub near historic highs of around $8.4 per million thermal units. Recall that the European gas prices see a 335% annual increase, with the British gas prices following at plus 252% increase. Gold and silver are under pressure again after trying to recover at the end of the week, with the former having returned to $1,720 per ounce on the back of persistent fears of poor macroeconomic developments and US GDP. In agricultural commodities, oats lost $4.5 per ton, approaching 12-month lows due to weather conditions in the US and Canada that led to forecasts of higher than expected supplies. Wheat lost $7.6 per bushel, also seeing 5-month lows, but the announcement by US officials that they will not impose sanctions on grain imports from Russia is positive. Also crucial is the bilateral pact under discussion between the two warring countries to open the safe path to the Black Sea so that the transport of priority goods such as wheat can resume. Coffee marginally held at $2 per pound at 8-month lows, mainly due to the chain reaction of the US dollar and the depreciation of the Brazilian real, while cocoa also remained at its 7-month lows, around $2,320 per ton. Finally, in the freight market, Baltic closed positive again in an attempt to break free from the severe pressure it has been under in recent months, in the face of the risk of a severe recession in the coming months, while incidentally still losing 50% of its price in just a few months. Individually, the Capesize gained 1.6%, the Panamax saw 10-day highs at 2,093 points, and the Supramax took marginal gains of 0.7%. In terms of economic announcements, we do not expect anything earth-shattering today, but on Wednesday, investors' eyes will be on the announcement of the Federal Reserve Bank of the United States regarding the new interest rate policy. In terms of corporate announcements, today we expect the financial results of NXP with projected earnings per share of $3.37 and revenue of $3.26 billion, and Newmont Gold Corp with projected earnings per share of $0.7861 and revenue of $3.26 billion. Last Friday, financial results were announced by Verizon with earnings per share of $1.31 and revenue of $33.8 billion, with earnings per share below forecasts. NextEra Energy with earnings per share of $0.81 and revenue of $5.18 billion, with revenue below forecasts, and American Express with earnings per share of $2.57 and revenue of $13.4 billion, with both above forecasts. The gains made both by Bitcoin and Ethereum and altcoins in the middle of last week seem to have retreated over the weekend and into Monday morning, as fears and uncertainty about the Fed's interest rate hike this week returned. Bitcoin and Ethereum missed the highs they haven't seen in over a month. The former fell and is now hovering below the 22,000 area, while the latter climbed to $1,662 in the early morning, only to fall a few hours later to $1,552. Altcoins similarly have retreated, with Cosmos and Avalanche and Solana recording the biggest losses, with a minus 7.36% at $9.34, minus 6.5% at $22.16, and minus 6.01% at $38.65 respectively. Thank you for joining us today. It was the TRADER24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.